There is a quiet truth that most traders never learn until they have lost money repeatedly in the market. The indicators they trust, the moving averages, the RSI, the MACD, are blind to the most important force in trading: volume. Price tells you where the market went. Volume tells you how much it cared about going there. And there is one indicator that combines both. It is the indicator institutional traders use every single day to decide whether they are buying cheap or selling expensive. It is the indicator that resets at the start of every trading session and tracks the true average price of the day, weighted by how much money actually moved at each level.
This indicator is VWAP, the Volume Weighted Average Price. If you are a beginner trader, or if you have been trading for months and still feel inconsistent, this video is your turning point. Today, you will learn VWAP from absolute zero. You will understand what it is, how it is calculated, why it is superior to every moving average you have used, and the 3 beginner strategies that will immediately improve your entry and exit points. This is not theory. This is the foundation of professional trading. Let us begin.
VWAP stands for Volume Weighted Average Price. But to understand what it truly means, you must understand what it represents. Imagine you are walking through a crowded market. Most people walk slowly near the entrance, but a huge rush of people floods the middle section. If you were to calculate the average location of everyone in the market, you would not just count heads, you would count where the most people gathered. The middle section would weigh heavier in your calculation because more volume happened there. VWAP does the same thing with price and volume. A regular moving average treats every candle equally. It says, this candle at $100 matters the same as this candle at $110, even if the second candle had 10 times more volume. That is wrong.
The candle with 10 times more volume matters 10 times more because 10 times more money traded there. VWAP weighs every price by the volume at that price. It shows you the average price where the real money moved, not where price wandered, not where retail traders clicked buy, but where institutions actually executed their orders. When price is above VWAP, the market is bullish. Buyers control the day. When price is below VWAP, the market is bearish. Sellers control the day. VWAP is the line that separates them.
Let me show you how VWAP is calculated. Do not worry. You do not need to memorize the formula. You only need to understand the logic. For every single bar in the trading session, VWAP takes 3 things. First, it calculates the average price of that bar, usually the average of the high, low, and close. Second, it multiplies that price by the volume on that bar. This is the key step. If the price is $100 and the volume is 500 contracts, the product is 50,000. If the price is $100 and the volume is 5,000 contracts, the product is 500,000. The second bar weighs 10 times heavier.
Third, VWAP adds up all those products from the start of the session and divides by the total volume accumulated so far. The formula, written simply, is VWAP equals sum of price times volume divided by sum of volume. This gives you a running average that updates with every bar. And because it starts fresh at the beginning of every trading day, VWAP resets at the session open, usually 9:30 a.m. Eastern Time for stocks. On TradingView, you add VWAP by clicking Indicators, typing VWAP, and selecting it. A white line appears on your chart. That line is the true average price of the day.
You have used moving averages. You know how they lag. You know how they give you false signals when volume spikes. Here is why VWAP solves every one of those problems. A simple moving average just looks at price. It does not know volume exists. It treats a candle with 100 shares the same as a candle with 100,000 shares. That is why moving averages often break when big money enters the market. VWAP is different. VWAP knows volume. When a huge volume bar hits, VWAP bends toward it. When volume is low, VWAP stays steady. VWAP moves with the money, not just with the price. Here is the comparison.
In trading, you do not care where price went. You care where money went. VWAP tells you exactly that. When price is above VWAP, buyers are paying more than the average. They are aggressive. When price is below VWAP, sellers are pushing price below the average. They are dominant. VWAP is the heartbeat of the day. The first strategy is the simplest and most powerful. Treat VWAP as dynamic support and resistance. When price is above VWAP, VWAP becomes support. Think of it like a floor. When price pulls back down to VWAP, buyers step in. They see VWAP as fair value. They buy the dip. Your entry is when a bullish candle closes above VWAP after touching it. Your stop loss is just below VWAP. When price is below VWAP, VWAP becomes resistance. Think of it like a ceiling.
When price rallies up to VWAP, sellers step in. They see VWAP as fair value. They sell the rally. Your entry is when a bearish candle closes below VWAP after touching it. Your stop loss is just above VWAP. This strategy works because institutions use VWAP as a benchmark. If they need to buy, they wait for price to return to VWAP. If they need to sell, they wait for price to rally to VWAP. You are trading with them, not against them. The second strategy is called reversion to the mean. It is based on a simple truth. Price rarely stays far from VWAP for long. Imagine VWAP is the center of a magnet. Price is a metal ball. When the ball gets too far from the magnet, it snaps back. When price stretches far above VWAP, usually 2 standard deviations or more, it is overbought. Buyers are exhausted. Price will likely return to VWAP. You short when price starts falling back. When price stretches far below VWAP, again, 2 standard deviations or more, it is oversold. Sellers are exhausted. Price will likely return to VWAP. You long when price starts bouncing up. This strategy works because VWAP is fair value. The market always returns to fair value. It may take 5 minutes. It may take 30. But it always returns. The third strategy is the VWAP crossover. This is your trend confirmation signal. When price crosses from below VWAP to above VWAP, the trend is shifting bullish. Buyers are taking control. Look for long entries after the crossover candle closes above VWAP.
When price crosses from above VWAP to below VWAP, the trend is shifting bearish. Sellers are taking control. Look for short entries after the crossover candle closes below VWAP.
But do not enter blindly. Wait for confirmation. The crossover candle should have high volume. The next candle should continue in the same direction. If volume is low, the crossover might be false. If the next candle reverses, the crossover might be a trap. VWAP crossovers work best in trending markets. In choppy, ranging markets, price will cross VWAP repeatedly without direction. Use volume and price action to filter the false signals.
There are 5 mistakes that beginners make with VWAP. If you make any of these, you will lose money. Stop them now. First mistake, using VWAP on daily or weekly charts. VWAP is an intraday indicator. It resets every session. On daily charts, it loses meaning. Use VWAP on 1-minute, 5-minute, or 15-minute charts for day trading. Second mistake, trading VWAP in low-volume markets. VWAP needs volume to work. If volume is thin, like during holidays, late afternoon, or on small-cap stocks, VWAP gives false signals. Only trade VWAP when volume is strong.
Third mistake, ignoring candle confirmation. Do not enter just because price touches VWAP. Wait for the candle to close above or below VWAP. A touch is not a signal. A close is a signal. Fourth mistake, using VWAP alone. VWAP is powerful, but it is not magic. Combine it with volume bars, RSI, or price action. The more confirmation you have, the stronger your trade. Fifth mistake, treating VWAP as a predictor. VWAP is a look-back tool. It shows you where price has been, not where it will go. Do not expect VWAP to predict the future. Use it to confirm what the market is doing now. Here is a pro tip that will take your VWAP trading to the next level. Add standard deviation bands. Standard deviation bands are shaded zones around VWAP. They show you how far price has stretched from the average. The first band is at 1 standard deviation. This is normal range. Price moves here often. The second band is at 2 standard deviations. This is extended range. Price rarely stays here. Reversion is likely. The third band is at 3 standard deviations. This is extreme range. Price almost always snaps back from here.
On TradingView, open VWAP settings and check bands. Set the multipliers to 1, 2, and 3. You will see 3 shaded zones around the VWAP line. When price touches the second or third band, you have a high probability reversal. Short at the upper band, long at the lower band. Your stop loss is just outside the band. Your target is VWAP itself. This is how professional scalpers trade VWAP. They do not just watch the line, they watch the bands.
Let us close this chapter with what you have learned. VWAP is the volume-weighted average price. It combines price and volume to show the true average price of the day. It resets every session. It is superior to every moving average because it knows where the money traded. You now have 3 strategies: VWAP as support and resistance, reversion to the mean, and VWAP crossover for trend confirmation. You know the 5 mistakes that destroy beginners. And you know the pro tip: add standard deviation bands for higher probability reversals.
This is your foundation. Do not skip it. Master VWAP before you add another indicator. Master VWAP before you trade larger size. VWAP is the indicator that separates retail traders from institutions. If this video helped you, hit like, subscribe to the Sigma Trader, turn on notifications so you do not miss next week's video, where I break down the VWAP plus EMA combo strategy, one of the most powerful setups for intraday trading. Drop a comment below. Tell me, what is your biggest struggle with VWAP right now? I read every comment. I answer in the next video. Trade smart. Stay disciplined. And remember, price tells you where the market went. Volume tells you how much it cared. VWAP tells you the truth. See you in the next one.